experience, you and your viewers. We'll do that later. Hey, so started to decided to hop on live, talk to you guys on this Saturday, going into Sunday Eve. Hopefully, all is well with you. Wanted to talk about this housing market. The last what 5, 6, 7 videos I've done has been over that. That's what I do on a daily basis. But really wanted to talk to those of you out there that really are on the sideline, concerned about either A, being able to buy a home, if that's still within your reach, uh, or not. And so there's a lot of rhetoric out here. Everybody's chiming in, giving that 2, 3, 4, 5 cents. But I just wanted to stop and take a few moments and come on live to see if there's anybody that might want to jump in and give my perspective from someone that's been in the mortgage business for 20 plus years now. And so my personal take is, depending on where you're looking to buy, and this is a US based uh, opinion, can't speak to other parts of the world, but depending on what market you're in here in the US, really determines the type of housing market that you're in, right? And so I like to educate people on the why you're buying a home, not so much on the price of the home. Because if your why warrants you making or taking that step, then the numbers tend to work themselves out, right? And so when we talk about whys, I'm talking about job opportunities. I'm talking about family size either increasing or decreasing, okay? I'm talking about, um, hey, hello to you, how you doing? Why is the screen black? Turn on the light. I'm sitting out in my garage, Eddie, so let me scoot up some so you can see me. Not necessarily worried about what's behind me. Hello, man, what's up? How you doing? Um, Welcome in. Just want to have a conversation about the housing market and what's going into, some of the whys. You guys can chime in. Let me know where you're watching from if you're U.S. based, and give me your opinion on your local market. But what I was saying, guys, is, when you understand your why, as to why you want to get into a home, the numbers will work themselves out, okay? Because the truth of the matter is, prices are up across the board for a lot of reasons, a lot of money printing, okay? There's still a shortage of housing supply when you juxtapose that to the folks that are willing and able to buy a home, right? That want to. Just talking about the housing market. If you're asking what I'm doing, okay, you're in California. Yeah. So when you say you have no housing market, give me a little more context to that. What do you mean? I know in California it's still uh, in a lot of markets there, finding a home is a challenge, right? So that's my point. When you understand your why, you know, then you could deal with those numbers. So let me finish that. House size increasing, or you're downsizing, okay? Maybe there was a death, unfortunately. These are reasons that you want to consider and or have in the forefront of your mind as to wanting to buy a home. During that pandemic time when rates were where they were, that caused a lot of people to buy who should not have bought, in my opinion, right? Let's see here. It says I'm in California, but I am not from California. Okay, I don't know where that's at. Boulder City. But anywho, so because of the money and the interest rates during, let's call it 2020 to 2023. There was a lot of people that should have not bought, uh, and so that further pushed down inventories in a lot of markets. There were a lot of people that were moving from states like California and places that had more strict rules pertaining to movement and things of that nature with the pandemic. Well, now it's flipped, right? I'm actually in Texas, and in the Austin area, they're seeing a lot of people move back, say like to Frisco or New York, some of these places, because that's where the opportunities are for certain sectors. And if you have those types of skills. So uh, I just want to encourage those of you out there that might want to buy that you really have to have a strong why now, and you must know your numbers, because in my opinion, the crash that people are looking for, we just don't have the fundamentals for that. It's not 2008 to 2013. We're not in that cycle. The supply is nowhere near that level, and the millennials, that cohort of people, is larger than the baby boomers. And so I think we get in a bubble sometimes when we're on YouTube and social media sites and things of that nature, and we think everyone is in the same condition. Well, in fact, folks that can qualify and understand their why, they're buying every day. So during the height, let's go back 20, 21, 22, we were almost up to 6.1, 6.2 million home sales, crazy high. But now they're back down. That's where the correction has happened, in my opinion, in the volume or the number of people buying. Okay, we've gone back down to right at 4 million, which is still a lot of people. So if you're on the sideline and you're thinking, hey, I'm gonna wait till prices correct back to pre-pandemic, say 2018, 2019, you're just gonna continue to miss out on your opportunity to get onto the property ladder. And unfortunately, a lot of folks have missed that boat, depending on the market that you're in. Okay, these 13, 14, $1,500 principal, interest, tax, and insurance payments, they gone in a lot of places. Or a lot of you all that are waiting are, in my opinion, also not wanting to buy some of the existing housing stock that can fit your price point, but it could be because the neighborhood in which those houses are in may not be where you want to live. So there's a conundrum. And there's only two things you could do, right? You can potentially increase your income to try to get onto the property ladder, uh, or you are able to see the potential, uh, the opportunity in pre-existing stock in older neighborhoods, and gonna go in and ride that wave to keep your costs low, or you're gonna be relegated to renting. And I think a lot of people are gonna be surprised after we get through the real housing bubble, pardon me, in this cycle, which is in multifamily. Okay, a lot of folks went ham in that space during these pandemic times because there's a lot of tax incentives and things of that nature that are assigned to real estate, but there's a lot of bad deals out there. And as that gets cleaned up, because a lot of refinancing is going on now, but as that gets cleaned up, you'll start seeing 2026, 2027, up to 2030, you're gonna start hearing people fuss and complain about how high rent is. And some of you guys are already experiencing that. So um, I am in the housing market, but I'm blessed, thank God, to where, we've done well in the past, and we've done the right thing with our monies and things of that nature. So I'm not a used car salesman, uh, but I love this business. I love the opportunity. I understand what real estate can do. But for some of you guys, you really need to figure it out for your future self, and you really need to, get off of the emotional side of things and look logically, uh, and find out how are you going to propel yourself and your family forward as far as growing a platform for opportunity, equity that can turn into a business or something of that nature, or for your future self. And so it's easy to have confirmation bias, even with myself, right? Because I'm in it, I'm in the weeds. But that's why I like to reach out to you guys, right? To see what's really going on, what's really happening in your market. So uh, let me do a shout out here. We had a couple of folks. So we got Eddie. Um, then we have I think that's Luli, if I'm pronouncing that correctly. No, if I'm not, no disrespect. And then Mint Koji. Appreciate you guys stopping by. But if we have anyone in a market other than Cali that's U.S. based, let me know where you at. Let me know what you're seeing. Are you a homeowner? Are you an aspiring homeowner? Are you a renter? Just trying to get a pulse on what's going on out here, and if you guys agree or disagree. So another thing, while I'm waiting to see if we get any interaction, and oh, before I go, if you guys know of anybody that might enjoy this conversation, have them chime in. But another thing that I'm noticing, since we're having this chat, is that you don't want to buy based upon the fear of missing out, FOMO. I just had one of my clients broke my heart. About a year and a half ago, we got her into a home, uh, and she's single and a teacher. And one thing that she was able to do, because I can't make you guys do anything, but I always try to make sure you buy a little bit below what you qualified for, okay? Because life happens, and it's a one family household. And this is my point where I'm going with this. If you're one income household, you really have to mind your business and know your numbers and try to forecast for life happening. Okay. So teacher, good income, things are going good. But with some of our follow-up stuff, she had reached out and said, hey, I'm interested in possibly doing a refinance. And a refinance is simply where you try to lower your interest rate. You're paying off your first rate, and with the hopes of lowering the rate. A lot of folks do it the wrong way, in my opinion, where if you're not getting at least a 0.5%, and most loan products now are going to make sure that there's a net tangible benefit. But if you're not getting at least a 0.5% reduction in your interest rate, you shouldn't entertain it because there's cost involved, right? But anywho, we told her, yeah, we'll look into it. Did a soft inquiry, and first thing I saw on the soft inquiry, that's a credit pull. That's not a hard inquiry, right? But credit score, the middle score was a 427. I was like, oh man, wonder what happened. And so, long and short, what's going on with her is life happened. Okay, insurance. That's something else that we have to educate you guys on. Insurance and taxes are a part of owning a home, but those are not fixed costs. They can go up and or down. And here lately, they've been going up. Why? Like my California folks that are on here, those Palisade fires and all those wildfires over the last 4 or 5 years, these natural disasters. Well, that's how insurance works. If you're with a State Farm or Allstate or something of that nature, they spread those risks to the other customers throughout the country. So when you have stuff going on the West Coast as far as fires or wherever they are, right? Um, Down on the coastline, the hurricanes and things of that nature, even on the East Coast, a lot going on. That's a whole nother conversation. So you have to have enough bandwidth when you qualify for a home, especially if you're a one income household. So she said her insurance went up. Naturally, it could do that. But if your income is so sensitive to where if insurance goes up, something is going to go without being paid, then that's an issue. So I was a little concerned because I was like, well, you know what? I know I underwrote her and talked her into a position where she had room for the life, for the fluctuation. Not only that, one of the aspects of a VA home loan is something that they call the residual income calculation. And so in that calculation, VA factors in a maintenance factor, and it's 14 cents per square foot. Here's a jewel. If you're looking to buy a house, right, you always take the square footage, multiply that by 14%, and if you cannot comfortably set that number aside every month, that's a part of your mortgage payment, you don't need to buy, because owning anything requires maintenance. That's what I want to say. There's been a big injustice. Let me get out here before I got to go. I'm just sitting in my garage. Get a little more of this twilight. Because when it gets dark, I'm going to shut it down. But there's a big injustice out here with a lot of these folks, trying to get you to buy, and not explain to you the cost of ownership. Okay, there's a cost. So we factored all those things in, right? We factored in that maintenance cost. She had all that, she was good to go. Well, what I didn't know was her car went out, okay? Her car went out on her, and uh, she, I got to go get another one. Well, the car payment is $800 a month. Guys, how are we getting $800 a month Kias? And so we have to be more financially savvy. And I'm not disparaging the young lady because it's just her. And I know a lot of women, no disrespect, get scared and things of that nature. But probably could have got a car a lot less expensive. Well, mortgage payment, miss one, credit score, through the roof. Through the floor. Because there's a hierarchy. Mortgage loans, student loans, installment loans, that's the level. You 30 days late on a student loan, I've seen 800 scores go to 620. Not a student loan, a home loan. Same thing with student loans. And she has student loans that were not being paid for during the pandemic for the life of me. And I'm not getting on you guys, but here's the deal. Whenever an opportunity is given to you, what was the opportunity? No interest, no minimum payments due. A lot of you guys should have paid those student loans off during the pandemic, okay? You never allow someone to, you hope for the best, prepare for the worst, right? And so if those loans would have been forgiven, all right, they would have been forgiven, but that was the opportunity. A lot of you guys prior to the pandemic, the student loans were in default. So they were brought current, no interest due, no payments due. That was the opportunity. So if you missed it, don't beat yourself up. But now they're back. So that's a payment that a lot of folks didn't have in their budget. I accounted it for, however, in this situation, because I talked her into getting on an income-based repayment plan. But those IBRs, and now that they're going to have some revisions and some revamping of those things, but you may just be paying a quarter of the interest, meaning the balance is going to grow. So that's another thing we got to get on, right? Are these degrees worth it? You got to ask yourself that. It's a business decision. It feels good. It's a participation trophy. You're getting a degree, but does it translate into dollars? Okay. And so this is very important. And I'm talking about owning a home. These are all things that we need to understand before signing the dotted line, because right now I can qualify on paper, but I'm qualifying you on your gross income, not your net. So you have to know your numbers. More importantly, you have to have a significant why. Is your family increasing? I'll tell you another one before I get off, right? And again, if you guys want to comment, you could comment below. But I think I'm gonna start coming on doing more lives. But I have another client, completely situation. Two, it's a two income potential household because the wife, which is now a domestic engineer, but she works PRN, she's a nurse. She kind of works, but the main job is maintaining the household, right? Domestic engineer. But her husband makes real good money, okay? And so they were going to look to buy another home because they got a new bonus baby, unexpected. The family is growing, okay? The neighborhood that they were in really wasn't conducive for younger kids either, right? So they reached out, we qualified them. So boom, they looking at this is over in Florida, because we lend nationwide, but they're looking at $700,000 purchase price, only to find that, hey man, this new stuff that's being built now, and it doesn't match $700,000 in their mind, because it doesn't. Okay, a lot of these builders, you got to remember, they're building on scale, economies of scale. That's their competitive advantage. Okay, so they buy the land dirt cheap, and they're putting not the best into these homes. It's production. And so they came to the conclusion, we're going to keep what we have and we're going to add on. But here's the deal. The only reason I was thinking about moving, or they were thinking about moving, is because my family has increased and we need another room. Let me see what this comment says before I move forward. Don't refi, give up your equity and pay higher interest rate. Okay, if you bought in 2020. Yeah, I agree with you, right? As far as that rate is concerned. But here's what a lot of people don't know. That's the purpose of a HELOC or HE loan. Because the equity tapped in, locked into your home, let's say you have credit cards, okay? That's averaging 21% interest. I agree with you. Don't touch the first. See, it's about strategy. It's about talking to those that understand. And so if you can get a HELOC or a HE loan that doesn't take out the first, but now you're able to consolidate those credit cards and put them in a better vehicle to pay it off. That's smart. If you're able to add an ADU to your property or buy another income producing property, because a lot of people are going to have to rent. That's very smart. So we can't fall in love, right, with the equity in the house, because it's untapped. Although it's a good inflation hedge, in my opinion, but are you growing? Is that the best place for it? So I agree with you 100% about not touching the prosperous investor, about not touching the first, but it just depends. Because if you have a worse debt situation somewhere else, it may make sense to have a HELOC or a HE loan. So thanks for that comment, because I agree with you. But let me wrap up before it really gets too dark. So back to my client. They decided, hey, we're going to add on a room to the existing home. So back to how I started the live. It's all about the why. Is your family increasing? Are you downsizing? Was there a death or divorce, unfortunately? These are reasons. Or am I moving for a better opportunity to make more money for a job or a career? These are why we buy. During the pandemic, a lot of folks bought based off of FOMO and because the rate was held down too long artificially, and a lot of folks bit off more than they can chew. So, hey guys, I appreciate you stopping by. Again, Eddie, Lulu, what is that? Mint Cujo, and then the prosperous investor. So it's about to get dark out here. I'm gonna let you go, but you guys enjoy the rest of your weekend. Be safe, and we'll talk to you soon. Peace. All right, how do we end this?